Hello guys and girls, and welcome back to another episode on the Falcon YouTube channel. Hope you've been enjoying content, and we've got something really exciting today. As joined with me is Neil and Jake. As you know, they are the Falcon coaches. So we thought today this would be a great opportunity to really actually just go over some chart work, get you prepared for 2020, because we've got some big things happening within the markets. Before we switch it up a little bit, we've got some key topics that we do want to talk about that we think that's going to really help you just break through to another level and make sure that your mind is in the right place. But more so, from a technical perspective, we're going to be going over some chart work so you're ready for 2020, because truth is, guys, look, these guys have got to be ready now, right? Yeah, 100%. And we're going to get into a few key currency pairs that we want to start off with. But before we do get into that, before we go into the chart work from you guys, what do you think is the, just from the outlook, before we actually go into the analysis side of things, what are your main focuses for now in 2020 in terms of currency?
For me, across the board, it's looking pretty good. I mean, like most pairs have been relatively corrective for quite some time now, but that's just shaping up very nicely to springboard into early next year. But for me, it's the S&P. Pound dollar's looking very nice. A lot of the pound pairs are actually looking very good for next year as well. S&P, like I said, and the DXY. Looking really interesting.
Yeah, the DXY has probably tested so many people's patience this year. Just been squeezing. But again, these kind of structures that we see, because for those of you that don't know how we trade, you might be joining the channel for the first time. We trade very pattern identification structure, so we don't focus on things like indicators or anything like that. And the thing is, we've come from those kind of styles. We've been in the markets for a relatively long time to understand different styles and what works for us and what resonates with us. I mean, Jake, you originally started with more of a indicator-based crossover.
Yeah, so I've been trading almost 10 years now, so crazy how long time, how quick time goes. But again, you just evolve over time and you work out what works for you and what resonates with you. So for pairs for next year, as Neil said, DXY is looking really nice. We've been saying for a while now that we can't correct forever, that there's going to be some movement, and as you've seen the last couple of days, we're starting to get that movement.
And if we prepare now, I'm sure you both agree with this, we're literally at a point where, look, we're going to be at the end of 2019 before we know it. It's going to be 2020. This next 5 years, like we've been saying for a while, the momentum's kicking in. And what's happened? The momentum's kicking in, as we've been saying. But the next 5 years structurally in the markets, there has never been a better time, and I'd like your kind of opinion on this, but there has never been a better time to be a trader in terms of what the conditions that we have to come. If we look at how corrective these squeezes have been, we've not really been trending fully. I mean, we've had some big moves, and you can still do well in a relatively corrective period. But what would you say for people that have kind of gone through this period where they're almost going through the motions right now, and they may not be prepared, for example, for this next 5 years, put it that way? What would you say is the best way to get their mind sort of right?
I guess for the best thing to do is, again, be prepared. Go back to 2014, 2015, when we did have those big impulsive phases, and see the opportunity that's there. And if you're someone that maybe is break even, up a little bit, down a little bit, that's okay. We're in a corrective phase. You can definitely still do well, but learn from those mistakes. This is where you put that work in, so you prepare for these big impulsive moves.
Like Jake just said there, even if you are like relatively new, or if you're finding it quite difficult to trade at the moment, you're only making a couple of % each month, there's nothing wrong with that. That's still progress, that's still progression, that's still good returns for a corrective phase. But what you should mostly be focusing on is not the percentage, the outcome. What you should be focusing on is sharpening your skill set and the processes, getting them locked down and to a point where you're ready to capitalize for the rest of this year and early next year, when the market really does kick on and that momentum comes back into the market.
100%. I mean, if you can get all of those things you've just both mentioned ready now, next 5 years is going to be huge, and 2020 to 2021 in particular. But that preparation, guys and girls, starts now. And with that being said, let's get into some chart work. So a few things that we do want to cover. So we want to start off with the DXY. We're going to be going over dollar CAD and pound dollar as well, as we do believe there's going to be some huge moves there across the board. And I mean, we could go into so many pairs, but just a few, just to get your mind right and how we can look at previous data to then forecast, right, why are we so focused on those? So just going to the DXY now, you guys are very familiar with what this looks like. I mean, even just on the weekly chart, right? This would be a good point. So before, myself included, right, come from more of a support and resistance base, lots of different styles, included patterns in my journey from very, very early on, but there were still things like support and resistance. How does it feel now when you guys look at the charts and you look at structure and then looked at how you previously traded? Does that make you feel like, if you knew what you knew now, basically, how would you do things different? Do you feel like you'd be a better trader, is what I mean?
Yeah, definitely. I actually found my old journal about a week ago that had my support resistance on, and I just couldn't look at the charts the same. So the way I look at it now is that there's so many lines that it just confuses you, because if you're targeting maybe 2%, okay, that's only a 2 to 1, I may stay out of that trade. But then for us now, we're playing, say, the 90% rule, so Falcon guys will know what that is. That may be an 8 to 1. So you just have all these lines in your way, and it just stops you and prevents you out of just fear, I guess.
And one of the things that holds back a lot of traders, especially newer traders, is having a lack of clarity in their minds about what they're looking for in the markets. They might have a decent understanding of what they're looking for, but they have so many different lines, trend lines, support and resistance lines, indicators, things like that all over their charts. It clutters their view, and a cluttered mind as well is not a mind that's conducive to a clear, concise decision making. So
exactly that, and that's a really good point. That's one of the major factors of why we trade the way that we do, and we have this simplistic approach, is because at the end of the day, as a trader, you want to be able to make calm, concise decisions. But if your charts don't reflect that, how can that be congruent with your decision making if you've got all of these things? No wonder you're frustrated, right? So let's get into a bit of the chart work. So we're on the DXY at the moment. This is what we've been looking at for a while. We've got this big squeeze that we can see circled here. So if you just take, like, I'm sure a lot of you understand simple pattern identification. If you just take the channel for what it is, if I wasn't showing any of you this on the DXY and it was just a currency pair, and we just draw the channel in, and you just said that there, you would probably have a strong indication that this is going to move to the downside. Now, there's one thing looking at a pattern and saying, well, it's just an ascending channel. That's true, but you need to know the variations within it, which is why week on week, on a weekly basis, this is why mentorship, having coaches, having people to help you is so important. Because if you looked at the channel, you'd say, well, it's just a sell, I just sell it. But when do you sell it? What variations are involved? What's the possible outcome that could this move to the upside? If you don't know how to deal with that, how are you going to be prepared for 2020? So we've actually been mapping this how long now? Pretty much throughout the whole year?
Yeah, pretty much the whole year. And one thing on that is it's fairly easy to predict where price is going to go. It's hard to actually capitalize on. So anyone can jump on the charts and say, look, this is a big sell, but you can't make money from that. You need that specific strategy to take advantage, to capitalize on that move, and actually to bank money from it.
100%. Easy to pick direction, slightly harder to have a strategy, which is why we're giving you more of a general outview and outlook right now, so you can either apply your own strategy or try and learn from what we're doing. So at the DXY now, we're on a daily chart here, we can see the structure. Now you can see it clearer. Don't get too caught up into the higher time frames. Yes, the higher time frames give us the direction, but that can take a long time to play out. So when we're looking at this particular structure here, what we're essentially anticipating is that we're going to get a break of this structure all the way to this low. Now we have a rule in Falcon, which you guys are very familiar with, which is the 90% rule. And what it does is it gives us an edge to understand that there is a 90% probability we'll get to the beginning of this correction. So we're calling this a correction here. Now, if you're a trader that doesn't understand our strategy, then you're probably asking yourself, where is the correction? Where's the beginning of the correction? So we don't expect you to understand it at this point, but just so you understand our thought process into the longer term view, this is why we look long term. So you imagine as a trader, Jake, now I'm sure you'd agree with this, when you have the confidence to know there is a 90% probability it will play out, how does that make you feel when you're trading? We're trading other people's money, so trading at scale, how does that make you feel when you've got that clarity from what you've traded at previously, different styles?
Well, that plus the break-even method, plus a few other things, obviously in Falcon, it takes the emotion and the stress away. Trading capital, I don't care what anyone says, when you get involved in expedite other people's capital, it is difficult to start off, and it is an emotional toll. So if you can reduce that any way you can, it's definitely going to benefit you in the long run.
Anything you can do to sort of have a more relaxed approach and mindset when you're on the charts is beneficial to your trading, especially when you are trading larger capital. It's very easy to do this if it's a couple of £100 or a couple of £1,000, but when you're looking at 6-7 figures, it doesn't matter how long you've been doing it, you need a strong mindset, and that definitely comes into effect.
Oh yeah, I mean, if you're putting on like a couple £100 a position, then we could go to the 5-minute chart and find 55 flags and sell every single one. You're not going to do that. You're not scalping the market. If you're thinking about growing and actually treating this like a business, which is what we allude to all the time, you need to think about how you're going to do this at scale. So that's how we look at it. We're looking at it, we're building you up. So essentially, and I assume this for the rest of the community, that you got into trading because you want to trade larger capital, because you're doing the same thing, but it's scalable. You don't want to then start working harder and put in more hours to spend more time to find more positions, because you have this belief that more trading will give you more results, which is not the truth. Less is more the majority of the time.
Yeah, you don't want to replace your 9-to-5 job with trading 9 to 5.
Yeah.
So
And people do get caught up in that,
Yeah.
don't they? They almost like feel like they have to like scalp the market essentially, and they feel like if they put more trades on, then they'll get more profit. But this mindset, I think this really does come from, again, that same thing, kind of employee over time. If I do more work, I'm going to get more of an outcome. You're not thinking at scale. So again, this is what we're looking at with scale here with the DXY. Anything to
I
add?
actually had that for myself when I first
Oh,
went
really?
into full-time trading, because I went from a 9-to-5 job into being a full-time trader almost overnight. And I had this, it was quite tough on my mindset, because it was like, if I'm not on the charts, if I'm not actually placing trades, then I'm not doing anything. So I started, I stopped following my plan basically. I stopped following my routine that had brought me to that level of success. And I started over trading, tinkering with trades that were running, doing different things with my management of my positions, and my results just absolutely tanked. And it took me a couple of months to really sort of wrap my head around it and get back onto that routine that got me successful in the first place. So definitely understand what you're talking about when you say, less is more most of the time, especially with trading.
And taking a step back out of the markets, like knowing when to, it's not even just about like knowing when to step back out of the markets, it's feeling good stepping back out of the markets and knowing that is a necessary ingredient of your success. Much like if you go to the gym, recovery is good. Otherwise you would just go to the gym constantly and you'd never rest. You need growth. But in trading, we adopt this belief, but if I put on another trade, surely I'm going to make more. But really, you just undo your hard work. Feeling good about stepping back and saying, I don't need to do anything. What I need is patience. Anything to add, your end?
Yeah, I was going to say a lot of that comes down to obviously the other video we talked about self-sabotage is a lot of people chase the market and revenge trade because they are trading such a small amount. They're thinking, okay, well, the more trades I place, the more money I can make. But that sabotage is, okay, I want that instant gratification of money in my pocket. But if you're thinking, I'm going to learn a skill, again, we're treating like a business, we can talk about that later, but if you're thinking 2 years down the line, okay, 2 years time, I want to be trading X amount, say $100,000, $1 million, would I be doing that, what I'm doing now and then? And it's most often not, it's a no.
You've got to get them thoughts, them decisions in place early on now, so that it's scalable along with as you scale your trading account.
Just getting out of that gambling mentality where it's like, I have a £1,000 account, I want to scale that 100 times. It's like, it's not how you make money. What you do is you build it, the same with you guys, you build the skill, and then investor capital isn't difficult to, if you have the skill, it's not hard to find capital.
People will find you, trust me. It's not, this like, people fantasize over it. I've only got a couple of £1,000, so I need to trade in this way that maybe is more aggressive, so then I can bank 30, 40, 50%. It's the wrong type of mindset to have. If you focus on having the great processes, you'll get the outcome as a side effect and you'll get the money anyway. People will invest in you. This is not difficult. So this is what we want for people. This is essentially why me, Jake and Neil, we adopt the same beliefs, the same habits, and we focus on things the same way. We focus on things at scale. So this is what we do for the community, guys and girls. For those of you that don't know, we do this because we want people to feel good about it. What a good feeling, like when you guys coach people and things like that, when we see people, they take on capital for the first time, and we can know confidently that person knows their that they really know how to take that capital. They're not going to go do something crazy and start switching something up, adding in something that they just don't need. They're going to trade the system that they know that works, and they're not going to switch anything up. That is the best feeling for us, because we know it's exciting for them because they've never experienced things like a 10K trade in a day or something like that, or in a month, whatever it be, and they actually have that financial freedom. I think that's one of the best feelings.
Yeah, and again, we're not saying this stuff because it sounds good, we're saying it because it works.
Yeah.
For us, you're learning from our mistakes. I've been 10 years, you've similar as well. So we've been in the market a long time, we've made a hell of a lot of mistakes, but we've learned from them. So that's the whole point of mentoring, is you learn from someone else's mistakes. And it speeds the journey up.
And what about people that actually feel like they don't need a mentor? That's almost like a thing in the world as well.
Yeah, it's pretty brutal. We were talking about this the other day, but if you're successful and you don't have a mentor, then you have the choice. It's like, okay, well, I'm making money, I'm successful. I feel I'm happy at the level I'm playing. I don't need to go up another level. But if you're not successful, you're not making money, then it comes down to ignorance and ego. If you're saying I don't need a mentor, but you're not successful, what does that mean?
Yeah, you got to think of it like...
It's hard to listen to, but again, it's the truth.
But people do get caught into that mindset. And the thing is, you got to think of it like this. CEOs, people that worth hundreds of millions, to top athletes. Some athletes have a coach for stretching, then they'll have a coach for nutrition and something else and something else.
They've got a team around them.
Yeah, you have to have, if you're really serious, and in trading as well, this is why you invest in education, this is why you invest in a coach, things like this, because you need to invest in that, because if you want to be successful, you need people holding you accountable, all these kind of things. But guys and girls, what we want to do, we're going to answer a few more questions that have been sent in through messages previously on the similar topics, get into a bit of probability as well. But let's dive into a bit of chart work now, so we can really prepare these guys. I think there's some key things that we all want to go over, and we'll get into some questions towards the end. So just going back into what we have in the charts here with the DXY, essentially we've got a really good outlook. A lot of people are predicting, we've spoken about this a number of times, bull run on the dollar. Whether that's going to happen or not, it doesn't really matter. So how we're going to approach it, there's two key areas that we're looking for. This previous low here and the beginning of this correction. So as traders, what we know, we're all prepared for this. We are essentially anticipating that the DXY is going to sell off structurally. This is patterns that have repeated themselves for years and years. So we're better to make data-driven decisions on what the market repeats itself rather than what we think about the macro picture or the bigger picture. That really doesn't matter, because that can take a long time to play out. So essentially how we're going to position ourselves is we're looking at price, how it behaves to these areas, because what we may actually have is a particular pattern that we recognize in Falcon as a running channel, that this can actually give us a type of pattern here, which we're not going to go into detail now, that will push to the upside. That is the one variable. Is there anything that you would add in terms of what would, let's say, put you guys off this just tanking to the downside and us positioning ourselves in a lot of dollar rate positions like euro dollar long and things like that? Is there anything else in these areas that you would look out for?
I think you've covered it perfectly. What about you?
Yeah. For me, it's preempting, and it's looking at how we approach this lower ascending trend line that you've got drawn in there.
Yeah.
So if we approach this in a very slow and corrective manner, that's going to be an indication to me that perhaps this isn't ready to tank down yet. Without giving too much of the strategy away, this is how we forecast in advance, and we look at the price action that we've got to hand right now almost as like an indicator of what we're looking for to happen next. We're not reacting to the market, we're preempting, forecasting, and then adjusting ourselves accordingly. So for me, if it's there correctively, very slowly, it might not be ready to go.
And again, going back to macro, we don't care what the macro picture is doing, because we're planning for the buy and the sell. So if you're prepared both ways, then you can capitalize both ways. What people, and they've done it in 2014, 15, when the market crashed, any idiot could have made money. You just sell, like say you're trading the euro dollar, sell, and you would have made a lot of money. Those same people applied that same strategy the last couple of years, and they've actually gone backwards because the market has been fairly corrective. And these are the ones that have that strong bias. All that does is just, it influences your trading, and you can't make decisions based off obviously a proper strategy.
And that's so important what you just said about like having that bias and having an opinion about what's going to happen next, because you could have all the signs in front of you, but if your bias is so strong that we're going to be having a dollar bull run, for example, then you're not going to see what's clearly right in front of you.
Yeah, and I mean, people do get too caught up into that, and that really does just hinder your growth, because you're so focused on the fact that I made money in these years and now I'm not. What's happened? What's happened to this? What's happened to me? And it goes into like very self-pitying type mindset. But the cold hard truth is, like, imagine you buy Bitcoin, when it was at its lowest. How many people would have recommended to a friend, I've got some Bitcoin, I bought some. Does that mean now you're an entrepreneur because you bought it at a level that you made lots of money? Those people find a way to give it back because they're not mentally prepared. It is exactly the same thing. And this is why we talk about these things so much. Trade in a way that can adapt with the market conditions. Would you guys say that's your most favourable thing about the way we trade?
Yeah, definitely. Because speaking about Bitcoin, I know a couple of people that did very well out of it, but then lost it all, because what happens is they start getting money, and it's like, okay, well, I'm going to risk more. They start getting more money. The same thing with the stock market between 2000 2008. The market was going up, people made money, so they kept investing more and more. Then what happens? 2008 rolls around, they lose it all, and they actually go backwards. So again, it comes down to greed, fear. Like, everyone's trading out of greed, so you need to have that proper plan. And again, before we're talking about the confirmation bias with macro and stuff, the best analogy is, say you're shopping for a new car. How many more times do you see that car on the roads? So it doesn't mean that people have gone out and bought that car, there's just more on the roads. It means that you're aware of that car. Same thing with the market. If you have a confirmational bias of the buy, you're not going to see anything that shows a sell. You're only going to see stuff that obviously backs up your own decision.
Yeah.
Yeah, you're going to find reasons to fit your agenda because you've already decided that is a buy or that is a sell. And this is where the ego gets involved. But what we do to combat that, because that's a really good point, is we apply more of a neutral approach where we're thinking in terms of the probable and the possible. This is why we look at that. And, I've done a video on this, probable and possible. This helps us to stay neutral. So we haven't got our ego involved where, this has to sell or surely it's got to do this. We don't think like that. We let the market come to us, we get permission from the market and we act accordingly. It's really that simple. It's data driven, looking at the market, get permission, take the buy, take the sell. We really couldn't care less whether the DXY goes to the upside or to the downside. Will we be ready is the question, and will you be ready? And this is what we want you to be ready for. So essentially you can see on the DXY a very simple structure. This was just an overview of what we want to really get for you, so then you're focused on that. What I want to move on to now is USD CAD. We have a lot of opportunity on this particular pair. What do you guys think about what structure we have? Is there anything that they can look at previously in terms of what happened before that's going to help them with the predictions?
Well, I think if you look at the large corrective channel that we're in at the moment, you can look left and have a great indication of what we could be expecting to look out for on coming over the next few months. That's something which we always try to hammer home in our coaching as well, is to go to the higher time frames and zoom out and see what the previous price action is telling us.
It's almost not identical in terms of it's not going to be like
repeating themselves. So
it's not going to be exactly. You're not going to be able to match up it candle by candle, but you can see this is just a larger version of that previous correction. Mm-hmm. And where did we come from, right? We remember this trade. This was another one of these 90% probabilities. We knew when we were selling these trades on the way down, there was a 90% probability we'd get to the low. Why does that give us an edge within the market? Well, then you're not cutting trades down short and just banking a couple of percent. You've probably seen people where they sell from here, they bank a couple of percent, hold themselves back.
Yeah, they'll take a really good entry, but then choke the trade and bank 2%, 3%, and then miss an extra 40%, and they kick themselves. And then they go to other pairs and revenge trade and try to get back that missed 40%. And they go backwards.
This is why we use structure as our guide, as for not necessarily where we're targeting, but areas that we're expecting to reach. Mm-hmm. That's why we don't target, like Jake was talking about, support and resistance levels, or even going to like the 4-hour 50 EMA, things like that. Because sometimes price will head to that region and stop there, but more often than not.
Are you just cherry picking?
Yeah, well, anything will work if you have a large enough data set. Mm-hmm. But what we find is that over the longer term, with that scalable long-term approach, the structure just plays out over and over again.
That's something we can get the viewers to go back and actually look at a few pairs and see how well these structures play out. Mm-hmm. They repeat themselves over and over again. So it's not just picking dollar CAD. You can go to any other pair and see how reliable they are, and that's obviously what we trade.
Oh, 100%. And when we look at this type of structure, right, yes, there's a correction here, but what we will be doing right now in Falcon, which is what we are doing, we're studying this little bit of price action right now. This has already given us a clue, right? This has already given us a clue what's going to happen next. If you took an ascending channel for an ascending channel and just said, well, that's just an ascending channel, well, technically that's broken the ascending channel. So does that mean that we're going to drop now? Not necessarily, right? So it's just about understanding these relevant bits of price action, so we can see is that, well, what we're expecting that we may possibly have one more push up. Again, you need a strategy to be able to capitalize on this and manage it and actually bring profit. But it's no coincidence that a lot of times in the market, and we've spoken about this on previous YouTube episodes, what does the market like to do? It likes to break the high, catch people on the wrong side of the market before it drops. And what do we have here? We have a particular pattern that's given us an indication that we may just break this high and then we drop.
If you draw a ray line in from that previous high mark and then draw some of the structure here as well, just so that people can see this a little bit more clearly. But what we're looking for is, like Mark just said, one more push to the upside, hopefully breaking through that ray line onto the upside. And this is psychology 101. Like, we talk about mass psychology so frequently in the content, in the strategy, and it's just all about trapping people on the wrong side of the market. And then that's where you start to see the bigger moves in the opposite direction.
We've just had it then, we've broken to the downside, but obviously Falcon guys know we've broken correctively, so we didn't get involved in that sell. People just trading the pattern, they would have taken a trade there and probably been tagged out or running a loss right now.
Exactly, and that could be on the flip side of, if you don't understand patterns, patterns could be holding you back. Mm-hmm. There's lots of things that can hold you back, but if you don't fully understand how to execute it, then of course it is. And this is why we have a unique way of looking at patterns. We look at the nature of the market. This isn't something that you're not just going to find somewhere online. It's something that we've learned over years and years and years of understanding the market nature, which is why we're anticipating something like this. I mean, we can see there's a double bottom within the pattern. There's a possibility that we can push all the way back up. And this particular correction, guys, we're expecting that we may have one more final push up, get people caught on the wrong side of the market before the bigger drop, and then we'll be targeting those lows. Is that where you guys will be targeting as well?
That's what I'm thinking that is most probable in terms of what could happen next. However, if we were to suddenly move to the downside from here, I don't mind, I don't care. We trade it either way. What I would do is wait for an impulse to the downside, a clear indication that the direction is changing, and then I'd look for the first safe opportunity to enter.
And to you, is that permission from the market that you've kind of essentially, you've got the impulse, now that's clarity, you're not bothered about the push up now.
You've got the confirmation.
Yeah, I don't need the market to go up or down to make money. I can make money either way. And that's a really quite a comforting and relaxing
100%.
thing about trading as well. It should help remove a lot of anxiety, and that goes back very nicely to the point that you had earlier about having that bias. If you're fixated on this only going to the upside, what are you going to do if that doesn't play out? You're going to be stressing, you might be holding on to your losing position, getting deeper and deeper into the red. So, and that's why a lot of newer traders, they lose their capital pretty quially.
They blow their accounts by doing something like
and
this.
they're trading out of hope rather than out of actual technicals.
Yeah, don't be a hope trader. That's if there is one, you know. and the thing is, right, you know, if you're a beginner, that's fine, it happens, but move on from it. At least learn from your mistakes and recognize, are you going to do the same thing over and over again, keep blowing your accounts? I mean, have you blown an account?
No, I've
blown an
learned
account
early on
quickly.
Risk management. It's crazy.
You know, it blows our minds, right? That like it's more difficult to blow your account in minds, but that's why I'm lucky that even when you can't say everything that you've learned from other courses is bad, because they're not, because there are good things that I've picked up from people, really good people as well. But when I originally learned, people were already risking 1%, so this wasn't, I didn't risk 1% right at the beginning. That's just because my ego was involved and I thought I was invincible. But I was still actually taught to risk 1%. But very quickly I realised that this isn't sustainable and I could probably do some damage here. And then you realise it's actually quite difficult to blow your account unless you're just a muppet, basically, and you're just risking 5 or 10% per trade. But if you have no guidance on that, I get it. You want to make money, so you're thinking, well, if I do this, it's going to help me.
It's that greed kicking in.
Yeah.
People think, okay, well, I've got a small account, I want to grow it to a large account. 1% is going to take a long time to get there, and they think they're going from that mindset of turning 1,000 into 1,000,000.
Of course,
right? And then they're like, oh, well, if I risk 10% per trade, then I can get there quicker. If anything, it just slows them down, because you could have 3 or 4 winning trades and you get the confidence up and think, right, that's it, I'm going to risk 10%, 20% on this trade. If that one trade goes against you, you're worse off than when you started, before you had your winning
100%.
streak. So it is the slow, steady, methodical approach to it, and treating it like a professional and treating it like it's an actual business instead of a side hustle, a little hobby, that will help you grow your account quicker over the longer term.
And again, like we were saying earlier in the video, we're speaking from experience. So I started trading at 3% per trade, and I still didn't blow my account. Yeah, just reckless. But again, I still didn't blow my account, but it comes down to 3% was obviously the higher end of risk. But again, we've made mistakes. My fluctuation on a smaller account was crazy, because I was placing multiple positions. Some days you'd be up 10%, some days you may be down 10%. And on a small money, you're more okay with that. But if you're doing that at 100,000, you're down 10k, up 10k per day.
How would that affect your mindset?
Yeah, you're capping yourself. And again, we've spoken about this before, where if you're treating this like a hobby, then that's fine. Like if you're just having it on the side of your income, saying, okay, well, what I'm risking is less than what I earn in a day, that's fine. You're going to treat it like a hobby. But if you want to scale this and trade full time, trade invested capital, you can't be doing these childish things, I guess. It's harsh, but it's true.
Yeah, you got to be treating it like a business. We were talking about this earlier. We want to create an actual episode just dedicated to how we all personally treat it like a business. We all trade investor capital. There's all certain things that we put in place, processes, routines that we do. And if you would love to hear about that, then of course, let us know in the comments and let us know, because we think it'll be super value. Everybody treats a business slightly differently, but it comes from the similar core foundations that you have to have in place, which will be key. But another position that we do want to show you, USD CAD, very simple in that sense that we just need to be patient, up or down, we don't care, we're just prepared to capitalize. Another one that we want to look at is pound dollar. So pound dollar, we was actually forecasting this from the top to the downside. So essentially, we was looking at this particular channel here to the downside. You guys and girls remember this in the Falcon community, right? You probably remember these trades. Do you guys remember this from the top?
Yeah.
Right? You still in?
This was quite near to when I joined Falcon.
Oh, really?
Yeah.
Yeah, that's crazy. I mean, and we was actually tracking this, if you remember, for the sell previously. We was looking to sell a little bit earlier. It pushed up. What did it do? People get caught on the wrong side. They think, oh, hold on a minute, that move up, they get scared, they think, well, it's going to the moon now. Then what happens? It just does exactly what we expected it to do. Why did we have a good indication? Well, we just zoom out and we just look at how patterns repeat themselves. I mean, we could literally go over this all day. We have a big ascending structure, we push down, we create a 5-year correction, then we push down, and then within these moves, we just have typical patterns that repeat themselves. And what's quite interesting, which I'm sure you guys would agree with, is that right around Brexit, I mean, we could point out Brexit quite easily, right? What do we have? What pattern? Typical. Impulse, correction, continuation. Not that any of you traded Brexit.
No.
Yeah.
No, myself, no.
Wouldn't advise anyone to be trying to trade through high impact news like that.
But again, it comes as no surprise. So we see these things happen way ahead of time. And that's good for Falcon members. Go back to the 2018 webinars and actually see, obviously, yourself talk about this position.
Yeah.
We were talking about the big sell. It's now completed that 90% rule. That's, again, no surprise. Patterns just playing out.
Yeah, I mean, we don't have a crystal ball. There's no ego involved in this. This is not, oh, I called this trade or I called this. None of that nonsense. It's just these patterns repeat themselves, and all we're doing is positioning ourselves and recognizing how powerful that is as traders. And that's what we're seeing with the pound pairs at the moment across the board. There's a lot of opportunity, dollar-related, yen-related, pound-related, as I'm sure you'd all agree. And when we're looking at this particular play, now we've had the majority of this move to the downside, 90% of this has been filled. Now what are we expecting? A push to the upside. So what we're going to be looking for 2020 is more so for this to complete this move to the highs, and we may even break out even further. But there is huge potential on the pound pairs. Would you say the same sort of thing?
Yeah, I'm looking for the push up, and then that overall sell is looking very, very nice. So if that breaks down, again, patterns just showing the way.
100%. What about you, Neil, in terms of are the pound pairs your favourite, dollar pairs your favourite for 2020 or leading up to that?
Well, I think there's a lot of fear around the pound pairs at the moment because of this ongoing uncertainty around Brexit. And I think we might even cover this in a future YouTube episode around Brexit, focusing on the pound pairs. But if you zoom out, like what we covered before, and you look at the potential of what is available on these pound pairs, pretty much across the board, they are looking pretty ripe for the rest of this year moving into 2020. So that's some of my favourite opportunities.
You've done quite well on pound dollar recently.
Pound dollar earlier this month and last month, was very good to me.
Yeah.
And it just shows, don't get caught up in macro. So this is a perfect example of the structure plays out, people look back and it's like, oh, well, I should have got involved in that, but this news, so I stayed out because of news or this rate announcement or this FOMC or something that the PMI doesn't make a difference. It just shows that structure, it commits to itself.
Yeah. If you're
Sorry
to cut you off, but if you're constantly worried about the news, you're never going to be getting into trades.
Paralyzed.
If you go onto Forex Factory or a very similar website, there's something every single day, pretty much. So if you're not going to be trading because of PMI or this and that, then you're always going to be staying out of the market. But okay, you might have a very short-term little bit of volatility spike there, but you look at the bigger picture, the direction has already been priced in.
Yeah, well, we've said this for a long time. News creates volatility, not direction. Doesn't mean that the patterns are dictating the world. That's not what we mean. We mean that we're recognizing the bigger picture is already being priced in the form of these structures that have repeated themselves for over 30 years. This is not our opinion. This is just what's happening. There's lots of different ways to trade. We completely agree with that. But we want to focus on a way that is sustainable, and we find this to be the most sustainable method for us, and it suits our personality. Something we can do for long term as well. And even just speaking about that with news, right? What did we have previously? We could just CAD yen is a great example of what we had recently. There was a bit of news around here. So we're still in CAD yen. There was a scaling. I didn't get the scaling myself. But what a coincidence when we're looking at this overall move, break of the ascending channel, impulse correction continuation, a trade within this area. What was it? Something like, was it a rate announcement?
There's a rate announcement.
Yeah. So a rate now. What a coincidence that there's a rate announcement right here with this correction. There's a particular, Falcon community, you'll know how to take this type of trade when it's ready and things like that. But you can just see this is not, you can't make this up. It's just constant. This is not just me cherry picking. Go and find it for yourself. You'll find hundreds and hundreds of examples. Go and back test it. The best way is to go and back test the strategy so you can see the performance of it. And when you see this play out over and over again, you can see why we, hold this so dearly, to let these patterns play out so then we can execute on them. I think that's the biggest thing. I think, we can give a bit of an overview of the market. I mean, S&P as well. That's another one that's actually pulling back just a little bit. But S&P overall, bigger picture, if this sells off, we know the yen pairs are likely to power up. If equities sell off here, there's going to be some serious volatility in currency. So I think that, what's your sort of thoughts on S&P overall from the bigger picture? Do you think we're going to be pushing all the way down back to this longer term trend, or this is going to be just a short move?
Well, I'm in from almost the exact same position you're looking at. So I'm looking at for the sell at the moment, and I'm seeing a short bias at the moment. But again, I'm not caught up with the news that the world's going to end and there's a big recession coming. So I'm just trading the patterns. So if there is a buy, then I'll be aware of it. But at the moment, it's looking really nice for a sell.
What about yourself?
I mean, going back to the macro side of things, I do believe that at some point we will have a recession. They're cyclical, they come and they go. It's inevitable. But that's not putting me off trading the technicals in the meantime. And also utilising proper risk management. So I'm only ever risking 1%. And when I do get a safe opportunity to, I move to break even, get the risk off the table. So whatever happens, and I just play the technicals for what the picture is telling me. I have a short bias on this in the short to medium term future, maybe down to this ascending trend line. If we get to there and then we start to move back up and we get more of a squeeze, that's absolutely fine. I'll lock in percentage, trailing it down as I always do, above or below the 1 hour swings. And if we reverse, then I'll lock in some profit. If we break this ascending trend line that we have down here and continue to move further, fantastic.
Exactly. So you see that, guys and girls, it's like, it doesn't take you long to speak to someone that knows how to trade for you to realise if they know what they're doing or not. So essentially, subconscious forecasting, what you're doing, you know what you're going to do, how you're going to do it, where you're going to do it, when you're going to do it. It's really that simple. And if you're not going in depth, you've done a video about this forecasting in depth. If you're not going in depth enough with enough detail of your forecasting, how are you going to make these decisions? This is why when we look at this overview, this is of course a very raw, kind of rough overview for you. This video was more about getting some really key topics that we've spoken about today, and we hope you're taking a lot of value away from that. And I think it might be quite interesting to do some future things where it's very technical based. Of course, we're not going to be explaining our full strategy, that's for our community, but we can give you a sense of direction. And if that can help, you go and then back test and do your own thing, maybe even help with your own strategy, then of course that's us providing value to you guys coming back to the channel. But I think overall, just really pay attention, even if you have to rewatch this over and over again, pay attention to what these guys have said and myself have said of these key things that we do, how our mind's kind of geared and wired so we can be prepared. We're not that far away. I think we're like 5 weeks out from the Christmas party in December, which is just insane how quick that's gone along. And then it's going to be the end of 2019 and then 2020. People get prepared in 2020 in January? We need to be prepared now. And this is why we're doing this. Anything to kind of finish up of how to
as you said there, again, we want to be proactive rather than reactive. Big trade on dollar CAD happened the 2nd of Jan this year. It was at least a 10% move. If you're waiting till the first week of January to do your goal setting to be prepared for the year, you're already too late. So again, be proactive rather than reactive.
A business doesn't start forecasting for the coming quarter or the coming year when that year or quarter has started. And why would you approach your business, as in trading, the same way? You plan it in advance and then you hit the ground running when that starts. So always, like Jake said, being proactive rather than reactive.
100%. I couldn't agree more. And one thing to just finish off and add there is that I think a really good question to get these guys and girls ready, no matter what strategy you're trading right now, ask yourself that tough question of, are you actually treating trading like a business, and what does that mean to you? I'd love to know in the comments as well. Some of you may be doing that really well and you might have some tips to share. What does trading like a business mean to you? Go and write that down, actually write it down in the passage so you can gain a little bit of clarity. You might write it down and figure out, well, I'm actually not treating it like a business, or I don't know even how to do that. And this is why we want to create these kind of videos to help you out as well. So really hope you've enjoyed this episode, our kind of just rough overview forecast and just all the little tips that you've taken from the video. Awesome to have you guys on there again. I'm sure you're enjoying it. Yeah. And guys and girls, love the feedback, love the engagement. If you do want to see any particular types of content, or Jake risking 3% on a trade,
I'm interested to see the comments and see what you guys want to see. So
let us know, guys.
Appreciate it, guys and girls. I'm sure we'll catch up with you very, very soon. Have an incredible weekend, and we'll catch up with you soon. Thanks for watching.
See you guys.
See you guys.